Okay, home buyers and sellers, it's July 2025. I want to give you some insightful tips about what's happening in the market across the United States that could be really useful for you if you're thinking about selling or buying here in this current season. Three things that I want to bring to the surface here in this conversation. The first, new construction right now could be a great option if you're a home buyer. Number two, price growth across the United States is slowing down. In fact, there are 22 out of 50 major markets where we've actually seen a decline of pricing over the last, let's call it, 6 months. We're about midway through the year. I'm shooting this video midway through July of 2025, so we can look at data essentially through the end of June. So we've seen price declines in about 22 of the 50 major markets, and we're seeing a decline in price growth across the rest of those markets. And then I'm going to give you what many experts are calling as the latest forecast for the rest of 2025. Okay, so let's talk about new construction. So what we're seeing, and I'm going to show you a corresponding slide here, is that we've seen a very high increase in the amount of available homes that are new construction. And so what's happening is builders are becoming more aggressive, right? They're offering pricing incentives. They're offering other forms of incentives in terms of rate buy downs to help consumers qualify and afford monthly payments. Because a new construction builder, a new home builder, is not emotionally attached to a home like a family would be for the home that they have owned and lived in, and that they may need the equity that has been built up in that home to then go forward and buy the next home or move on with their life. Right? Home builders, they see these homes as line items on a balance sheet, and ultimately they need to move these properties so that they can clear up their balance sheet and then move forward with their business plan. So new construction communities across the United States can be a really good option if you're a home buyer in this current season. And I think we're going to see that here for the balance of the rest of the year. We're also perhaps seeing that some home builders are starting to reduce their forecast for new inventory coming on the market, which would mean that now could be the time to go buy that home, especially if you're going to be in a home for a long enough period of time. In general, I suggest to home buyers that they look at a home purchase for a 7 to 10 year window minimum. Now, in general, in the United States, we see people buy and sell homes roughly about every 10 years now. Used to be every 7 years. Now it's extended to about every 10 years. And that's because the costs of getting into a home can be pretty high, right? Closing costs and upfront fees, etc. And, homes don't typically appreciate at the rate of acceleration that we've seen over the last 4 years. This has been a very unique period post-pandemic, 21 to 23, 24. Now we're in 25. The second point I'm going to make here is that we're seeing pricing increases start to slow down, right? The rate of acceleration of pricing increases has slowed down. In some cases, it has flattened out, and in some cases, it's starting to decline. So anyway, that's the deal with new construction. I'd encourage you, as always, get with a real estate professional. Even if you're thinking about buying a new construction community, yes, you can go to the community. Yes, you can register. Yes, you can buy the home directly from that home builder, and that's not a bad plan. However, if you have a real estate agent advocating for you, supporting you through the process, helping you do the research, helping you compare community 1 to community 2, that could be really, really useful. Of course, our agents, I'm a broker of an active real estate firm, our agents are very involved in helping their customers with new construction communities. And in fact, in many cases, help their customers save a lot of money and avoid a lot of potentially costly risk factors going into a contract with a new home builder. New home builders not looking out for you. They are looking out for themselves. I'm not saying they're bad people or trying to, get anything over on you. Always good to have your own advocate and buffer in a transaction like buying a house. Okay. Second, pricing growth is slowing down. Let me just reference my notes here. I want to make sure I stay on top. Right. So we're seeing a big shift in buyer demand across the United States. Currently, we've got almost 500,000 more buyers than sellers in the marketplace. As I shared, 22 out of the 50 major markets in the United States are starting to see a price decline. I've got the graph here for you to take a look at, and you can see where some of those markets are. They tend to be, as is typical when we go through these periods, when we go through these adjustments, they tend to be in the Sun Belt, right? So we're talking about Texas, Florida, Arizona, to name a few of the key states. Whereas we see states like New York and Pennsylvania, Illinois, to some degree, we're seeing pricing holding steady, if not go up, right? And these are major infill markets. That's why in the northeastern or the northern parts of the United States, these are infill markets. There's just not a lot of additional property to start building on, whereas in the Sunbelt states, right, there's more ground, okay? And so we see this is typical of a cycle. Um, because we're starting to see softening in pricing across the country, and again, these pricing declines, it means two things. Number one, if you're a buyer, you got more options. I've been talking about this a lot in the State of the Market update for South Florida, but I also want to talk about it with you across the United States. In general, buyers are in a better position today because we're in something of a buyer's market. And that means that you've got choices, you're going to be able to negotiate, and you're going to be able to situate yourself in a favorable way. It's not true of every market. Real estate is very localized. As I said, 22 out of 50 are in declines. That means 28 out of 50 are either flat or on an incline or on the way up still. But that rate of appreciation is also slowing down in most of those markets as well. Okay, third point I want to make is let's talk about the forecast here for the rest of the calendar year, about rates and values, essentially, and then talk about the basics of supply and demand and how that affects pricing. So there is no one that is expecting rates to have any major decline over the next 6 months. Now, we have been holding steady in a range between 6 and 7% for a pretty extended period of time now. And while I know for many that were buying houses through the last 5, even 10 years, we saw rates as low as 3%, 4%. Some I saw, remember, just under 3%, right at like 2020, 21, where we hit really the lowest period for 30-year mortgage rate financing. We're now in the 6 to 7% range, which in some cases is more than twice. You combine that with the fact that homes have gone up steadily in value, now it just becomes very unaffordable. We don't, however, think that rates are going to have a tremendous decline in this calendar year. Now, I'm not an economist. Anything is possible, but no one is forecasting that. There may be some slight decrease into the under mid 6 toward the lower 6, possibly under 6. The Federal Reserve is meeting next week to talk about what's going to happen. There may be a slight decrease in the short-term borrowing rate that the Fed sets. That does not specifically, by the way, translate directly into mortgage rates. So it's important that we understand that. Let's talk about home values across the United States, starting to decline in some markets, holding steady in other markets, slightly increasing in other markets. So it depends on your market. But we don't think that there is going to be this continued rate of appreciation like we've seen over these last 3 or 4 years. Number one, it's totally unsustainable, right? The reality is it's become one of the most unaffordable times to be a U.S. citizen, certainly around housing, right? With the cost of goods and services, the cost of utilities, the cost of insurance, all up. And borrowing rates have also been higher because we had to curb inflation 2 years ago. It's just become a very unaffordable time. And so housing, like any other commodity, right, as a roof over your head, like any other commodity, hits a point where the consumer just says, I can't go there and I'm going to hold back. Well, as more and more people are holding back, meaning that demand is declining, and at the same time we're seeing more supply come up, pricing starts to come down. It's true of any commodity. So that's what we think is going to happen here for the balance of this year. So should you buy? Should you sell? It really all depends on whether or not you have a compelling reason in your life to be in the real estate market. We're likely going to see a low number of real estate sales transactions across the United States. In 2021, we saw a record number, almost 6 million transactions in the United States. Last year, we saw 4 million, a 50% decrease or a 33% decrease, or I think I got my math right there, maybe not doing it on the fly here. Anyway, I'm somewhere in there. Either way, we got less transactions coming this year, which means that it's going to be very important, consumer, for you to have the help of a real estate professional. We strongly advocate for that. Of course, we've been in the profession a very long time and we've helped so many people along the journey. Hopefully you've had a good experience working with a real estate agent before, which would prompt you to use one again. If you haven't, I'm here, happy to answer any questions you have. You can leave me a comment or reach out directly to me. I'm easy to find. But that's what's happening here in the US real estate market as of July 2025. Thanks so much for watching.